Exercise 3.8 starts out pretty straightforward, but gets a little bit tricky, and the tricky comes in if you don't read all the information. First of all, in the border they tell you this is a year-end adjusting entry, so you have to keep that in mind. This is at the end of the year, so this is 12/31. You have to make sure you see where that piece of information is coming from. And then you have to go through and carefully apply that information to each question as needed. So the first one, they tell us equipment cost $42,000. It's purchased at the beginning of the year for cash. Depreciation on the equipment is $7,000 per year. That's easy. We don't have to do anything. Debit depreciation expense $7,000. Credit accumulated depreciation $7,000. Straight definition. The next one, on June 30, the company lends its chief financial officer $50,000. Principal and interest at 7% are due in 1 year. Well, remember the interest formula is interest is equal to principal times the rate times the time, and the time is always in parts of a year. So we have to figure out this guy's interest. So it's $50,000 times 7%, 0.07, times 1/2, 6/12, because it was June 30th. So we have all of July, all of August, September, October, November, December. So that comes to $1,750. So debit interest receivable, $1,750. Credit interest revenue, $1,750. Some of you may be asking why interest receivable? Because he's going to pay the interest back at the end when he pays the loan, because it tells us principal and interest are due at the end of 1 year. If it told us he had to make monthly interest payments, instead of interest receivable and interest revenue, it would be debit cash and credit interest revenue. The next one it asks us to do is deferred revenue, and this company received $16,000 from a customer for a 1-year insurance policy. Okay, so apparently we're an insurance company. So we received $16,000. We have to divide that by 12 and then multiply by 3, because that was the total for 12 months. So we have to find out what 1 month is, and then we have 3 months, so that's all of October, all of November, all of December, and that's $4,000 if you do that. So we're going to debit deferred revenue. We no longer owe them $16,000. We only owe them the remainder, the $8,000 or $12,000 rather, and the service revenue that we've now earned is $4,000. So the math here isn't tricky. It's reading all of the information, and you have to be careful to make sure you get all of the information.